Thanks very much, Mike, and thanks for having me. And yes, it'll be fair to say that my my sporting career has mainly been with the round ball. Not to say, however, that I haven't played touch rugby at Macalester in the off-season. And some memorable story that goes with a guy by the name of Mark Bradshaw. I don't know if anyone knows Mark Bradshaw in the room, but he put a team together, and there was myself and a couple of guys from the golf club, and one week we were a bit short on players, and so Mark said, "Don't worry, I've got it sorted. We'll bring a couple of fellas along and help us out." And up turns Julian Savia and Buxton Papualingi. And anyway, it'd be fair to say that I thought I was reasonably quick, but no, very slow. So I've just given everybody some notes there. Just we're going to follow through something for you to sort of refer back to if need be. But myself, yes, started Tabak in Wellington here 20 years ago, and over sort of $220 million worth of business sales during that time, across a wide range of industries. So effectively, during that time, I've been assessing, valuing, and selling businesses. We're regulated under the Real Estate Act, so that's where we sort of fall into. And regulated under the same as gentleman over there from Ray White that I met earlier on. So what sort of skills are going to be helpful for, if you're transitioning, what sort of skills are going to be helpful for you to go into a business, and certainly your networking and customer connections and your sporting connections that you've got are going to be really useful. Some sort of business administration and or management courses out there would be really useful. Any sort of trade that you pick up along the way is going to be helpful. Certainly some accounting knowledge, work your way around a P&L, profit and loss, and a balance sheet is going to be helpful. And sales and social media is really important. And AI is coming in, which would be useful to sort of understand. But also looking around the room, and there is a number of what I'd call mentors for our players that are, transitioning. And there's some awesome sort of people in the room that you might want to reach out to. There's also accountants, lawyers, and bankers that are useful to have in your team when you're transitioning. Take advice and listen to advice, and then go and get some more advice. Would be the recommendation. Some people, and it was touched on whether you're setting up a new business or going in to buy an existing business. There's a number of reasons why you'd be buying an existing business. The business has been established, it's got brand and reputation, it's got history, it's got sales, it's got customers, it's got a whole pile of things that you can't create overnight. And that's why you're writing a check out to buy the business, because it is giving you a continuity of the cash that business delivers. So and that's sort of what's really important, is how much cash am I going to be getting on day one and month one and after 3 months and 6 months, because that's going to pay back any lending that you may have taken on board, and it's actually going to give yourselves an income. Also, you're going to be getting support from an outgoing owner, which is really important, because you may think you know a lot about the business, but they know a hell of a lot more than you. And they wouldn't have written it down or documented it generally, so you want to go through a process with an outgoing owner that is non-confrontational, to ensure that you can get their support when you need it, if you need it, into the future. Moving on to what trends that I'm seeing in the market at the moment. There's a lack of stock, lack of good opportunities to sell, and that's not unusual for when we go through sort of market events. And you take GFC, you take COVID. If businesses have sort of come off a bit, generally the business owner who was hoping to retire and exit and take their windfall or their retirement money out of the value of the business, they're the best people to actually bring it back to the level it was prior to these sort of events going on. So that's what I'm seeing at the moment, is maybe business owners are delaying their exit a little bit further while the business comes back to where it has been performing, so therefore they can get their value out that they've expected. That's a generalisation, because I'm certainly seeing some good businesses that are certainly going well. Trends Banks say they've got the doors open, and Alan will tell us that the doors are open, and that's good to hear, Alan. And so, long may that continue. There is certainly more scrutiny, and the scrutiny goes largely also, and Alan will touch on this no doubt, to the individuals that are buying the business. So look at their skill sets. What skill sets do they have to actually deliver on what that business does? So, for example, if you're, got a carpentry skill, well, and you're going to buy a retail business, that skill set might not necessarily match up so well, as an example. So banks are certainly making sure that the right people they're giving their money to the right people. We're seeing a lot more vendor or people selling their business, a lot more support in various forms. That also helps with the risk profile from a buyer's perspective. If they can hang on to the outgoing owner for a little bit longer or in some form or another, then, and certainly when there's maybe less buyers, then the vendors are going to support a buyer and transition into that new business. So a bit more vendor support, and that may be in the form of time and or money. So, for example, a vendor might say, well, look, I'll stay around for 3 months or 6 months as opposed to 6 weeks to help transition the business. And or money, so maybe Alan's not so loose on his pockets and not dishing out as much cash, so the buyer is going to rely on some of that cash to stay around in the business for a period of time, and the seller or the vendor is going to maybe provide some vendor finance, and there may be some conditions attached to that, and get their money out a little bit later. Share the risk in the transition effectively. There's certainly, I group buyers into private individuals, groups of individuals, companies in acquisitive mode, right through to private equity firms. And there's certainly, for any business owners or that are out there, there's certainly money in that $3 million plus range. There's a lot of private capital floating around. There is search capital funds that are around as well, and there's individuals that are being backed by funds to buy decent-sized, sustainable businesses. Down the bottom of that first open page, I've just listed a few transaction types for reference purposes. The bottom left we're looking at there, so that just gives you an idea as to some different business types, sale prices. Actually, now's probably a good time to talk about some acronyms. And one that's probably the most popular is what's called EBITDA. And right at the bottom, EBITDA is earnings before one proprietor takes an income, before they pay any tax, and interest and depreciation. So that methodology or that acronym is probably the most widely used in small to medium-sized businesses. So when you're looking at a business, someone will say, well, the EBITDA is X, Y, and Z. Well, that's kind of what it means. Not to be confused with EBIT, PE, profit, NPAT. So there's a whole range of acronyms that do get used, but it's important to just sort of really compare apples with apples and narrow it down to an acronym that you can actually hang your hat on, and that EBITDA position is where most, and we can access the most statistical historical data from, is that acronym. That's most readily available in the marketplace. So in those business sales examples, you'll see that EBITDA position. So that's, let's take that top line there. There's $1.1 million EBITDA. That was the, if I was the owner of that business, that's what's available for me to draw from the business prior to paying myself, prior to interest, tax, and depreciation. Yeah. And certainly, if there's anybody that has any questions around any of this at any stage, I'm happy to sit down at a later date and talk people through any of the logic or information that's in these notes that I've got for you guys. Over to the top of the next page, we'll just talk about, touch on selling multiples. So a business is generally assessed or valued based on what's the EBITDA times a multiple equals a sale price. So the multiple is determined by a range of things, largely by industry sectors to start with. So for example, a retail store is going to have a very low multiple compared to a scaffolding hire business, for example. Just because of the nature of the revenue, you've got to rely on someone to come in the front door every day for a retail sale, whereas a scaffolding business, they might have some equipment out on hire, and they've got a regular income stream off that, and they're moving that stock over onto new jobs all the time. So it's just a more valuable income stream to have than having a retail business, for example. So someone's going to pay more for a scaffolding type business than they will pay for a retail business. That multiple will be higher. So the risk profile of that business is lower, and a retail business has got a higher. So there's industry sectors, there's, what competitive advantage do you have, your business has over any other business. Your location sometimes comes into play, financial trends, business size, structure, owner involvement. So there's a whole range of things that we look at when we're assessing what the value of that business is, i.e. how transferable is that business to a new owner? How reliant is that business on the owner, and how transferable is it is really important. Move on to valuation methods. I've touched on this already, but just to reiterate, the most common valuation method is that EBITDA, that magical EBITDA number, times a multiple equals a sale price. Included in that sale price is stock, fixed assets, intangible assets. Intangible assets is another word for goodwill. Deal structures and financing. Well, a seller will always like cash up front on settlement and wave you off at the front door. A buyer will generally want to de-risk that a bit more and say, well, look, we'll give you a chunk today and maybe a chunk tomorrow, with maybe a certain set of rules around that, maybe based on the turnover or the profitability or the gross margin in the business. It can be structured a lot differently depending on the risk profile of both parties. Financing, again, we've touched on that. Alan's got the checkbook open down the front here, and vendor support are the two key ones there. What else have we talked about there? Current market. Well, current market is generally de-risking the transaction. So the buyer's trying to de-risk things, the bank's wanting them to de-risk it, and so generally you've got some level of vendor support in there, depending on the size of the transaction. Negotiations and due diligence. So generally I'm sitting in the middle like a real estate agent is for a house and negotiating the transaction between both parties, price and all the relevant conditions that go around that. And so I'll be negotiating effectively. And so yeah, I get fully involved in all that. Let's go over the other page, last page. So sort of pitfalls and things to sort of look out for when you're buying a business. And I've just listed a few here. There's many to think about, but certainly lease assignment. Make sure we're getting on with the landlord. Make sure there's some legs in the lease if it's critical to the business. Stock management. Sometimes businesses have, stock that's not moving or it's not turning over. It's been sitting, getting dusty. You don't want to be paying for that. So obsolete stock. Just make sure that you're looking at that. Staff. So important to highlight any key staff that are in the business. And try and mitigate the risk of them jumping ship when you come and take over. So that's something that's important. I'm always a big fan of a no surprises approach for the financial profile of the business, and I'll certainly condition the seller of a business on a no surprises approach, because once a surprise happens during any due diligence or then a buyer will just go looking for the next surprise. So if there is a surprise, tell me about it up front, and let's work through a solution on that and answer why there is that surprise. Yeah, there you go. Post-sale support. So look, generally my role's over by the time settlement happens, but there is sometimes a vendor support period and or vendor financing or assistance period, and I'm there to lend an ear and make sure that everybody's doing what they were supposed to be doing and agreed to do during the process. So post-sale support is, it's available there. I've been around doing this for 20 years, so it swings and roundabouts, and one good turn deserves another, and so always do the right thing. And then down the bottom, I've just given you an example of some sales data over the last 5 years. It's not out of Wellington, this is around New Zealand. We've got offices around New Zealand. So the key 3 or 4 there, import distribution, business services, trade services, and manufacturing are the major. The agricultural's probably our Hamilton and Tauranga office. And then there's a bit of retail in there. That's all I wanted to share with you. There's plenty more I could talk about, but maybe for another day if anybody is interested. So thanks for listening, and hopefully you learnt something out of that.